Okay, guys. Well, welcome to this Wednesday morning meeting. This is the Buckeye State Investors Group. We meet every other Wednesday at 8:30, and all are welcome. Anybody's able to join. All you have to do is just shoot us a message, and we will send you the link. It is hosted by myself, Ryan Gillen, and Kara Jones Ray. Kara, is it Kara Ray now? I don't know what to say anymore. So, is it Kara Jones or is it officially Kara Ray? What are we doing here?
It's still,
How's we got some echo here, so we'll just go with Kara Ray until she figures that out what it's going to be. But so yeah, Buckeye State Investors Group. We meet at 8:30 every other Wednesday on this Zoom call. It's hosted by myself, Ryan Gillen, and Kara Ray. But with the Gillen Group Real Estate Company, we represent Columbus, Cincinnati, and Dayton. And if you're ever looking to invest in other areas that we don't represent, we have great real estate agents that we know of that are investor friendly. So we're going to jump right into how we always start these, which is going over what we're seeing in the market right now. And then we're going to turn it over to Kelsey Denman with Elite Capital, and she's going to talk about, maybe current rates, what things are looking like for investors, and then I'll maybe also have a comment about the government shutdown. And then we'll turn it over to Don and Andy with Rapid Mortgage, talking about the investment loans. So that's on the docket for today. So what we're seeing right now, investing wise, is a lot of opportunity. It's just like the stock market where you invest when they always say buy the dip. And I feel like right now is the dip when it comes to real estate investing. There's a lot of houses with a lot of days on the market. There's a lot of houses that are just sitting. And when houses are sitting and they have higher days on market, it screams opportunity for people to jump in and make offers. If you truly want a property right now, you might have to make 10 offers to get one for a really good deal, but you're just kind of making offers until you hit one where someone has to sell. Right now, we're seeing people that are selling properties right now, they have to sell. They're moving. They're upsizing because they're growing their family. They're downsizing. They have death or divorce or whatever it may be. Those are the people that are really selling right now. So if you're looking for like single family homes, there's a lot of opportunity because these properties are sitting for a little bit longer. For when it comes to multi units, rents have really stabilized, and we're not seeing renters jump on properties like they did beforehand, and they're just constantly going up. So we're seeing a few more vacancies at the moment, which then puts pressure on owners, and then they also want to sell as well. So there's opportunities there. To me, I think it's a fantastic time to purchase. I think we have about 6 months of purchasing time to get these deals until maybe there's a little less volatility in the market to where people want to jump back in. That's my personal opinion on where I see things going. But right now, it hasn't stopped me from buying. I've added 5 new rental properties here in 2025 in my own portfolio. We purchased 18 properties for flip houses as well. So to me, I'm still pedal down. That might not be a lot for some people. It might be a lot for others. But at the end of the day, for my systems that I have in place, we are still pedaled down here in 2025, and we feel like it's the first time we've actually seen opportunity over the last 3 or 4 years. Um, Kara, is there anything that you want to add to that?
so there's definitely a lot of negotiations being had, and we can definitely be creative. Like I've had a lot of clients consider doing an interest rate buy down, and I think that's very, very smart in the current market right now. Um, so there's definitely different things that we can do to help make the property make sense and cash flow it, even though some people think, oh, the interest rates are too high to do so.
Yeah, so they're getting stuck on the interest rate a little bit right now instead of getting stuck on, how we can make this deal work.
Exactly. Yeah. When we just have to wire ourselves a little different to think outside the box to make it work.
Yeah. And when you say wire, it's a really good way of putting it because over the last 3 or 4 years, people have wired themselves to the house comes up on the market. We got to make a really good offer right away. and there's really no negotiating, and hopefully the numbers work because the interest rates were a little lower. Well, now we've got to make the numbers work in the reverse way. We figure out where the numbers work for us, and we try to negotiate them down. And so there's a lot of people that kind of forgot about negotiating over the last 3 or 4 years, and there's a lot of real estate agents that never had to negotiate before. If you started in 2019, you've never really negotiated before in your life
Yeah.
until the last like year. I mean,
That's
that's when we started. Yeah. Like I have a client right now that wants to put an offer on a place, and they're going to put it for like $75,000 under asking. I just told him just prepare for like a 2 week negotiation
mm,
if we
yeah.
can get this together. So I feel like rewiring people is a good way to put that. Um, let's go ahead and bring Kelsey in, and our mortgage star that decides, she tells us what our interest rates are and see if we can make these deals work. So Kelsey Denman with Elite Capital, she is actually a lender in our office as well, so we can run down the hall and demand lower rates, right? That's how it works.
Yeah, that's how it works. You guys tell me what
Yeah.
you want to get it done.
Yeah, that's what
Um,
I'm saying. So yeah, just go over what we're seeing interest rate rates wise. November 5th, 2025. Where are they at? Where do you see them going? And any kind of thing that you want to put in there.
Yeah, so I will say last week we closed actually a DSCR purchase and a DSCR cash out refinance. The purchase was at a 6.875 rate when we closed. That did cost 1 point, but it made sense for the borrower. So they decided to buy down. The cash out refi was a 70% LTV, and their rate was it was a 75% LTV. So they capitalized on the most money they could get out of their property. And the interest rate actually came in at a 7.25%, which for DSCR, that's amazing. So that's kind of where we're seeing rates right now. I would say those were both for single family properties. So if we're getting into multifamily, the rate might increase just a little bit. Obviously, it's a little bit more like property specific with DSCR, but the ratio has to work too. And as long as we're above a 1.25 ratio on the DSCR rates, you just see a really good starting point. So that's kind of where we're at rate wise. I know we just had a Fed meeting last week. We saw a little bit of a dip before the meeting. That's typically what happens with Fed meetings. So banks kind of preemptively cut their interest rates in anticipation for what the Fed is going to say. So we saw a little bit of a dip, and then they did rebound just a little bit as well.
So
But
question for you on that. So just for strategy that people are watching this, if we pretty much know like what the feds are going to do. Like it's pretty like people have like if you were a betting man, like the odds would be pretty high for like them knowing they're either going to stay the same or go up or down. Like they kind of they have a good idea if it's going to get cut or not, right?
yeah,
And you'll see that in the interest rate drop. Like if the interest rates drop like a week before, they're doing it to get ahead to be competitive in the market, correct?
correct. I would say it's not necessarily about a week before. I'd say maybe a couple days before or the day of, like the morning of the meeting, we'll see like some real volatility in the interest rates. And so I always recommend locking then. Sometimes they can backfire, sometimes they can drop even further, but really like it's just, are you a gambling
Yeah.
man or woman?
Yeah.
But
I
yes,
am a gambling person. So
yeah,
like if you were saying if I'm going to take that gamble and they dip right before the feds come out, that would be a time to lock in because
I would
more
say
often
yes.
than not, it seems like they dip and then they go back up the next week for the most part. Like they take that little dip just to get people excited in the door and everything. Because at the end of the day, mortgage companies, banks, that's a business as well, and they're competing for the business as well. So that might be something to think about if you're getting ready to lock in around a Fed meeting. See what happens a couple of days beforehand. Maybe if it goes up, you wait a little bit. You maybe if it goes up, you wait for the announcement. If it goes down, then maybe you lock in.
Yeah, I would agree with that.
Yeah.
So that's definitely a great strategy. But yeah, DSCR rates, they're still hanging out way lower than going a traditional investment conventional. I always recommend it. Less paperwork for the borrower, less of a headache. So that's the route I would take if I was an investor. But you know, to each their own. We can do both. We can do everything. We have about 25 lenders that we can broker a loan through. So
When
there's
you say you have 25 lenders to broker a loan through, what does that mean for people, and how does that help become competitive and figuring out, like, what does that mean? Like the average person doesn't know what does 25 lenders really mean.
Yeah. So think of me as the middleman. I am out there trying to find you the best deal for your specific situation. So we'll shop it around to at least 4 or 5, like of our main partners that do a good job for us and offer us great rates and fees. And then we'll present you with a couple of options, like, hey, here's what we found here. Maybe there's a prepayment penalty. Here's what we found over, you know, from this other lender. Maybe we have to put a little bit more money down, but the rate is way better. So we're truly a middleman shopping for you to find the best deal. Like I said, we have up to 25 people that we can do that with. However, you know, we really try to narrow it down to the top 3 to 5 that we're sending business to pretty consistently, because they tend to, like, once we build relationships with them, they tend to offer us, you know, a little bit better than what they would offer somebody who's just like a one-off. So it's all about building relationships, and that's something that we're doing on the client's behalf, just to make sure that they're capitalizing on the best.
That's awesome. Hey, there's this little government shutdown that's happened for just a couple of days right now. How many days has this been? I mean, it's been like a month or so.
I think it just
So
went over
it,
30.
yeah, it's over 30 days. So that's cool. But yeah, Kelsey, Don, Andy, you guys have all chime in. What is that? How does that affect the consumer?
Andy, you want to take it?
Yeah, I can roll. Honestly, it hasn't affected the consumer largely across the board, especially on the investment side. The area that we're basically not able to do right now is USDA loans, which in some of the more rural areas that happens. Obviously, you can't buy an investment property with a USDA loan, but we're still getting FHA case numbers. We're still getting transcripts. At times, we're having borrowers pull transcripts instead of like ordering them and waiting on them. But outside of that, we really haven't seen much of an effect, especially on our investment stuff.
Okay. Yeah, that's great. I think there's a lot of information out there, then a lot of false information that loans are being affected right now, but realistically, 99% of them aren't.
Well, it's the easiest excuse for a lender right now when something's not going right, right? If something's not going
Yeah.
right, we could always just point our finger at the government shutdown and say, "Oh, that's why it's not going right." But
Yeah.
it's really not. No, I mean, unless it is you're talking about like Jenny Mae who's buying FHA loans,
Yeah.
but that doesn't affect the consumer because that happens after the fact. But yeah, no, I think those are just common excuses from people when stuff goes wrong and they don't want to tell the truth.
It's a good point. It's a really good point. So,
Which we don't do. There's no fake excuses here. All right. So
just
everything.
blame it on the title company. Um, they're the last one. So, but oh, Jake would kill me if he was on this call,
Yeah, they don't
but
have
he's
any
not.
representation, so we're gonna.
He's not here, so I'm not worried about that too much right now. But no, we won't blame him that much. Well, let's hop in and discuss what the topic that everybody was really coming to, on here for, which is how they can flip properties for 20% of the money, essentially. I think that's the big question. So we've brought Don in. How do you say your last name, Don?
Mahan.
Mahan. Okay. We have brought Don Mahan in, and she is with Rapid Mortgage, and pretty much all she does are rehab loans, flip loans. Is that what you're calling them?
Fix and flip. Yeah. So
Yeah.
our part of it is that we do fix and flip besides DSCR, commercial,
Yeah.
and so on. There's a lot of other things we do, but one of the things that really help people get into the BRRRR strategy, which is to do a fix and flip.
And the BRRRR strategy, I might butcher this.
Okay.
I know there's a lot of R's in it, but it's buy, renovate, refinance, repeat. Am I missing one? I'm pretty sure that was
close.
right.
Yeah. Yeah. So
Yeah.
it is.
Yeah.
So
Yeah.
you buy, you rehab, you refinance, you rent it out, and you repeat it.
I forgot to rent it out.
Yeah.
Yeah, I
Yeah.
know the process, but there's just so many R's. But
Yeah.
that being said, it is a great possibility for people to, like, normally say you buy a property to flip and it's 150,000, you put 50 grand into it. There's not a lot of
Mhm.
people that have $200,000 just ready to go. Definitely when they're trying to get into this business. So, Don, break down, like, what they can expect with these loans and how they
Yeah.
can use it as a weapon for their investing portfolio and growing their portfolio.
Absolutely. I appreciate that. So just to break down, when it comes to doing a fix and flip, our loan structures are pretty straightforward. Typically, these are interest only during the term, a very competitive loan to value and a loan to cost, and then standard origination points. So we like to keep things transparent. So when I get a new investor or someone who has been an investor for a long time, let's break down the deal. Let's make sure that we vet these numbers together and that it fits your long-term goals. So a lot of the times when I talk to investors, you can do 10% down of the purchase price, and then we will fund 100% of the rehab. We're really going to break down what the numbers are. We will lean upon your realtor to kind of help you and make sure we're picking out the right type of numbers where we're being conservative. So I'm going to rely heavily on them to kind of help. So you're going to give me the address, you're going to give me the purchase price, what you believe and what we estimate construction costs to be. So that might be you, your contractor, somebody going in and walking the property to get an idea of, like, I think it's going to cost about 30,000 to rehab this home to get it up to where we believe the new after repair value is going to be, the ARV. So we're going to take those numbers together and we're going to make sure that it's going to be a good investment and that it fits your goals. Yeah.
Great, great. So what would be the steps for, say, a person that wants to do one of these for the first time? What kind of ducks do they need to get in the row? You said that, you're going to be working with a real estate agent.
Mhm.
Do they need to have any experience? Like, what's the way for them to get in the door here and to make sure
Yeah.
it's as smooth as possible?
Yeah, so definitely having that realtor that you like, and you trust, someone that you've been referred to.
Yeah.
That would be the first part. And then the second part is to kind of look at your assets, your liquid assets. How much money do you comfortably want to spend and bring to the table in down payment and closing costs? Because then it can kind of help us set us up to not fail and then have a strategy in place and also to know what your exit strategy is. So are you wanting to get into the space where you are building your portfolio and building that long-term wealth? Or do you want to gain that quick capital where you can buy a property, flip it, and sell it? So knowing that before you go into it helps a lot. So I would say assets then. The second part would be, where is your credit at? Do you have strong credit? If you don't, you can JV, which is joint venture with somebody, and create a LLC, because these loans do close in your LLC.
They do
And
close
creating
your.
an operating agreement, yeah, you can create
Yeah.
another member, bring that in. But no, you do not need to have experience. You can still do the 10% down, but that's the way that we want to look at the numbers and make sure we're making a good investment for you, because we want to know when we get you out of this loan, because it is a short-term loan, is interest only. It is a hard money loan. It is higher interest rate. So I don't want to keep you in that loan for very long. I want to have a way of the timing and how long it's going to take to spend that rehab to get you out of that loan and go into your next part, which is the exit.
Yeah. So what I'm hearing is the steps are, find that trusted real estate agent that I would suggest that they understand flipping houses. If they've never flipped a house before, I would
Yeah.
find another real estate agent that can help you, because they're not going to understand that um, your numbers aren't always correct. And so that sometimes you start opening up the walls and you find things and you spend more money, and just making sure that a real estate agent understands how to break those numbers down. I feel like that's a good place to start. Yeah.
Yeah, and
I
also
mean,
I suggest them to get an analysis of the property. Like,
yeah,
the builder knows their community. They have a system that shows them what other properties are selling for and
yeah,
what type of, bedroom count, square footage, all of those things. So yes, being someone who is well known and, like you,
yeah.
Ryan, that and has been a flipper before, you know how it feels and you know how this can work.
Yeah. And so it's feels great when you make money. So you got to make sure you get your numbers right. So feels
Yeah.
terrible when you work for free. So you got the right realtor. You feel comfortable with them. They know what they're doing. They're flipping, and
Mhm.
they can advise you in the appropriate way. So then we come to you, and you say, "Hey, we need to break down the property. We need to bring you comps. We need to bring you an estimate. What's it going to cost to flip? Do we need
Yeah.
to bring like contractors' estimates, or just like an Excel spreadsheet? Like, hey, this is what we're looking to flip. What does that look like?"
Yeah, that's a great question. This is a wonderful space for this because in the past, if you've ever tried to do a rehab loan on investment property, you had to have a contractor, you need to be someone who's licensed, but in this space, you don't. You can be the actual contractor. You can be listed as you're going to do this yourself. And if you decide to subcontract things or hire this electrician or whatever you want to do, you're in control of this. But it is, yes, an Excel
I
spreadsheet. We're
think
going to
that
break
I
down.
think that's very important that people need to like make sure this might be one of the most important things is most rehab loans throughout this country,
Mhm.
you have to hire a licensed general contractor to manage that deal. So that is completely different with this loan, which allows you to be that general contractor, which ultimately saves you money. Like if you're hiring a middle person, that's going to make your expenses go up by 25% because they got to get paid somehow. So the fact that you're allowing them to be the GC is a huge cost savings, and it's one less person that you have to deal with on the side of contracting.
Yeah, especially because you used to only have like 5 draws. And then someone had to go
Yeah.
out, they had to take photos, make sure you're on work on task. So you're in control of that. And it is a really nice feeling when you are the one who is spending your money
Mhm.
on this project. So yeah, it's really nice and it's more laid back.
Okay. All right. So
Mhm.
we've got the property, we've got the
Mhm.
realtor that's advised it, we've got the breakdown um, of the spreadsheets, and you guys are like, yep, we're good to loan on this property.
Yeah.
What is the next steps? What would be that would be, hey, we're closing on that, we have to give you guys updates. What's the next steps after that?
Yeah. As soon as you bring a property to us and then we help vet that deal and make sure it's going to be a good investment for you, then the next part is to give you term sheets so that you know what you're bringing to closing. This is going
Okay.
to be your down payment. These are your closing costs. And because we have so many different lenders that we work with, it's just so nice when you tell me your credit score and the location, how much you want to rehab. Maybe you want to buy a property for 50,000 and spend 50,000 in rehab. I'm going to kind of know where to go and how those numbers are going to work. So after you get a term sheet and you say, hey, let's go, then you're going to provide us a scope of work. You're going to provide us your LLC documents, your 2 months bank statements, photo ID. And then pretty much after that, it's having the appraisal done. You can usually get these loans closed in about, 2 to 3 weeks, sometimes faster after you have more experience. You can do as little as no money down after you have those 3 or 5 flips that can be documented. But it's a fantastic
So
space.
3 or 5 flips documented with you guys, or like say like me, is like I've done a couple dozen this year. Like, hey, here I've showed them. Here's what I bought it for. Here's what I put in. Here's what was my exit. This is how much I made. Or is
Mhm.
it like 3 to 5 with actually you guys?
No, it's just a combination of either what you have done either personally in the past 3 years or what your LLC has done, maybe another partner who's on your LLC,
Yeah.
if you bring in that experience, or if either one of you have been on another LLC, I can use that as experience. So um, there's different ways we can figure that out, but experience wise, you can either have zero and still get these good 10% down terms, or if you've had 3 to 5, your terms and everything just keeps getting better and
Mhm.
options.
So there's a possibility for people to find a
Mhm.
property, have no money out of their pocket, essentially, right?
No down payment. Yeah, you would just still
Yeah.
have your closing costs.
Yeah, it
Yeah.
has some closing costs and all that kind of stuff. But hey, maybe we structure that deal to where they pay for a bunch of closing costs and you have very little out of your pocket. You're flipping this house and you're refinancing. You're either keeping it. You just bought a property with no money out of your pocket and you're renting it out and you're building your assets. That sounds like a phenomenal deal. So,
Yeah.
um,
Another Another
Yeah.
thing to consider too is if you are not a seasoned investor, but you know someone who is, maybe it's a property that you want to invest in, but you link up and like combine an LLC with someone like yourself who's done it before. If you know you have someone that's
Yeah.
like, I've never done this, and you guys form the LLC together, we can use your experience. And you know, you would just be on the LLC with them. However,
Yeah.
they'd be able to get into the property at 0% down as well.
Yeah, that joint
That's
venture for sure. Yeah.
that's fantastic, and I think that's why it's so important to build relationships. I've got quite a few relationships that I work with right now with people, and I have more fun doing it with the partners. It seems like when we get pissed, we can get pissed together. When we're happy together. A lot more fun that way. But these partnerships are vital. And then if you're a young entrepreneur, a young investor, man, this is a great loan, and go find some great deals and bring it to a guy that's an experienced. Like, you brought a deal to me and it was going to make a bunch of money, and all I needed to do was just be a part of it for my experience. Like, that's a pretty good deal. So go find that person that you want to invest in, because this might be a great possibility. Don, where can they find you? Where can they find you? If you want to shout out and I'll have Kelsey shout out her stuff as well. Where can they find you to do these loans?
Absolutely. So I can, usually I just have my clients call my cell phone, a
Yeah,
lot. So, you can reach me at 614-288-5716, or you
yeah,
can, email me and we can set up a call and do a consultation, because every deal is going to be different. But the great thing about these deals is that if you need to close quick, we can close quick. But we'll just make sure everything is handled efficiently and we can, get you to the closing table.
that's awesome. That's awesome. I really appreciate. I think we probably just covered the surface with
Yeah.
all this, but I
I want
think
to
just
say too,
yeah,
Andy has done 10 of these loans himself. So he has experience from the actual like buy side of it. So I didn't know if there was anything that Andy you wanted to throw out as just like
yeah.
from being on my side of like the buying process, and like the flipping process, what, if anything, you want to add? Oh, can't hear you.
First thing I would say, especially Ryan talking about new investors, they're going to go on Google and Google's going to tell them that these things can close in 3 days or 2 days or 4 days, and how they can in the perfect situation. I think it's very important with a lot of these deals where you're getting them maybe at a discount, or you're getting them where somebody might offer more later, just to set the right expectations up front. Like if they say 2 weeks, even though Google says it can happen in 5 days, stay at the 2 week turn time. That way you don't kind of get into a situation halfway through. And then also, not just talking about the experience thing, but Ryan, correct me if I'm wrong, but I'm sure you see working with first time investors all the time where, they did one flip, ran up some credit cards, and their credit score is not good enough to qualify right now. There's a
Yeah.
lot of these programs where just talking about bringing in somebody for experience, you might be able to bring in somebody with credit where maybe the loan can be based off of their credit, even though the first time investor's credit dropped 50 points because they put too much on credit cards this month. So long story short, I think the most important thing is, before you decide that you can't do it yourself because of an extenuating circumstance, call and ask, because we may have a solution, or Don may have a solution that's like, hey, if you have XYZ, we can still do this home since it's the right flip, if that makes sense.
Yeah, makes total sense. And it's always it's about who you surround yourself with and what you need. And at the end of the day, you're not using anybody. You're actually providing them an opportunity to invest in a property. So go find that person that you can partner with, that you can each help each other. So yeah, I think that's absolutely massive. Um, Kelsey, where can they find you?
Through you guys, and
Say the same thing.
yeah, in your office.
Yeah.
And yeah, my phone number, personal cell, again, call me anytime, 937-694-3159. I actually, if you reach out to me first, we'll send you directly to Dawn for the fix and flip stuff. So like Dawn is an extension of my team, I'm an extension of hers. So where she will help out with the fix and flip, if your exit strategy is to DSCR it afterwards, she'll send you guys back to me. I'll help with the DSCR financing. So yeah, we're all just like a combined team. If you're looking for Dawn and get me first, I'll refer you her way, and vice versa.
Yeah.
So we're all a unit. So you guys, you know,
Yeah.
I'll post my information for you guys as well.
Well, that sounds great. I mean, this is the Buckeye State Investors Group, and so we deal with Ohio. And I want to throw this out there is I was reading an article and they ranked the top 20 places to flip houses in this country. And little old Dayton, Ohio is the number 4 ranked place in this whole country right now to flip houses. I just so happen to live in the middle of Dayton. So just throwing that out there, I'm pretty fortunate, pretty blessed to like be just dropped here in the middle of Dayton. And now something I love to do, which is flip houses. It happens to be the number 4 ranked place in the country to flip homes. So if you are thinking about flipping, you don't know how to start, this loan might be a great possibility. And if you're looking for a location, Dayton's great. Obviously, Columbus and Cincinnati are fantastic as well. So there are really, really great options. It's always nice to see when Dayton's on the map for something, right, in real estate. So, and if it's going to be something, I'm glad it's flip houses. Well, I really, really appreciate you guys coming on this phone call. We will be meeting next 2 weeks from now, which will be for our next meeting at 8:30, just like this one. Everybody's welcome to hop on that call. We will publish the Zoom link and you're able to hop on. Every other week, we will have a question and answering session. So we'll gather questions throughout the next couple of weeks that our investors have, or if you hop on the Zoom call live, you can ask questions as well. And then the following 2 weeks after that, we'll bring on a new guest that will talk about something that can improve your business. Okay. Maybe this is something that you didn't know about, like this fix and flip loans. It's going to be something on that lines where hopefully you can leave this Zoom call and go, dang, that could really, really help me. So it can help you invest into that next level. So I appreciate you guys all for coming on, taking your time. And this was the Buckeye State Investors Group hosted by the Gillen Group Real Estate Company in Dayton, Cincinnati, and Columbus. I'm Ryan Gillen, and then Kara Ray is on here as well. And so if you guys ever need anything, please reach out to the Gillen Group. We would love to help you and reach your investing goals. All right. Thanks, guys. I'm going to end this recording.